Well, good morning, West Coast, and good afternoon to the East, and good day to everybody in between. My name is Brad Etheridge. I'm the Chief Marketing Officer for the Center for Tax Strategies and Resources. We're pleased to have you with us here today. Have a little bit of fun talking about everybody's favorite subject, which is taxes and tax reduction. It's our favorite topic because that's a lot of what we built the Center for Tax Strategies and Resources about. Being able to provide that guidance that allows our members to be able to create larger sales and create new opportunities through the use of tax reduction for their clients, amongst many of the things that we'll talk about today. For those of you that don't know about the center, we are not an IMO or a PPO or a broker-dealer. We're a membership-based organization. I guess probably the best way to view us is to kind of see us as a study group on steroids.
Never heard that before.
You like that one? You feel free to use that one.
It's really good.
The center itself, needless to say, we have a little bit of fun going through this stuff, but the center itself creates a level of education and differentiation for advisors. We have, as members, we have some CPAs, we have some tax attorneys, we have a lot of financial planners. We've got some folks that are asset gatherers or just pure life insurance agents, and one thing they have in common is they want to be able to provide better solutions and opportunities to their clients through strategies, concepts, techniques, and training that they otherwise would not have access to. So the center itself is providing this free webinar today. We're going to tell you about an event we have coming up that could be career changing for you here at the end of September. We'll talk about that in a few minutes. But before we do that, I want to introduce the other person here on your screen, Simon Singer, who's the founder and my partner in the Center for Tax Strategies and Resources. For those of you that don't know Simon, he's been very successfully in our industry since 1966. He's in the top 1/10 of 1% of all financial planners in the US and has been for years and years and years. He's written several business bestsellers. He's quite a sought after speaker when the world allows us to speak publicly. And he has been a member of some very prestigious organizations such as Financial Planners Association, Advisors in Philanthropy, and is the past president of the Forum 400 and is the National Humanitarian Award recipient, which is quite an honor. One thing about Simon, I'll tell you that you wouldn't know from his bio, he lives for this stuff. I have never met anybody who's better getting a client to disclose more information and eventually look over to you and say, well, why wouldn't I do this? And that's usually his biggest closing line. So with that, Simon, say hi to everybody.
Thank you, Bradley. And hello, everybody. Thanks for taking the time this morning. I think you're going to be very pleased with what you hear today because it is something that is duplicatable and replicatable, and you don't have to be an expert in the tax planning business, as I'm not either, as Brad is not either. What we've been fortunate enough to do is put together a faculty of just some incredibly brilliant tax attorneys, CPAs, and a few financial planners that helps us look a lot smarter than we actually are, because some of this stuff can be very intimidating. What you're going to see today is going to be very intimidating, but what it is a fee-based tax reduction plan put together by a tax attorney. And so we're going to share with you what the pieces are, and then what the numbers are, and then how you might be able to avail yourself of utilizing this, because the fortuitous part of my being in the business since 1966 is the fact that over time I've been able to build a lot of really good, solid, tight relationships with people that are a lot smarter than I am, but I've also learned how to help them generate revenue. And that's kind of what we're doing, is we're teaching people how to do enough proper discovery and enough discussion of labels of various strategies so that they have the ability to create strategic alliances with tax attorneys and CPAs and help generate revenue for their practice and for their family. And we get to do the kind of things that we know how to do, which is assets under management or annuities or life insurance, etc. But the one thing that I will suggest to you is when you increase somebody's budget by reducing their taxes on a statutory basis, backed up by a tax attorney and a CPA with audit protection, etc., you find that you're talking in a different world than what most of these people are used to. And so with that, with that bit of a warning, I want to tell you, don't be intimidated. Just listen to the overview. We're going to talk a little bit about the components, but not a lot, because neither Brad or I are really smart enough to get into an in-depth discussion of the details. Just suffice to say, there are details. They are significant, but we're going to do a broad overview of that today. Would that be okay, Bradley?
Yeah, add something to what you just said there. I'm sorry, expand on something you just said, because it's such a key point. You know, you said it can be intimidating, and it is. And one of the first slides are going to talk about all the different types of taxes out there. You don't need to have the answers. You need to have the technique to keep the conversation going. You've always been a big proponent of questions that lead to questions. And it's not that you shouldn't know some of the answers, but you should know enough to be able to move the conversation along with the client. Get the client engaged, excited, that type of thing. So we'll do an overview of how we present a concept of a tax reduction plan being done by a CPA for a client, give you kind of a feel for how that would sound. And it's a tool that our members have access to be able to find additional dollars to fund products and solutions, make cases larger and solve problems for the client. So,
and it's a fee-based series of strategies. There's not a product involved. There are places where product can fit, but it's not required in order to be able to substantially save people taxes. And I think you're going to find this more than intriguing. So, yeah. Bradley, why don't you take over? Yeah. But just as a heads up, we're working in 3 different offices right now. I'm in California. Brad is in one place in Michigan. Bobby's in another place in Michigan. Todd's on his way to a doctor's office. Yeah. So we're going to be. This isn't going to be as smooth as you might hope, but I think you're going to like it. Go ahead, Brad.
I think it's going to be smooth. I like smooth. Smooth's good.
I'm good. I'm fair with that.
All right, check this out. Here's the technique. Bobby, next slide. How's that? Is that subtle? You know, when you're looking at all the major types of taxes that are out there, if you want to look at a landscape, you know, it's funny, a conversation, Simon, you and I've had this conversation with members and between ourselves more than once. You know, when you're talking about tax reduction to a client, what's the first thing that usually comes to the advisor's mind?
Yeah, all right. Go ahead. Well, it could be a couple of things. It could be, are you a CPA, or I already have a CPA and I'm well taken care of?
Yeah, and then from a client's perspective, what an advisor usually said is, well, they're looking for tax deductions, right? I mean, show me how to do bigger qualified plans or whatever. All those things are fine, but that's not the only taxation that matters. So if during accumulation you don't have taxes, if during receiving the money itself and distribution you don't have taxes, if during the growth you don't have taxes, those are also key components that if you put together a strong financial plan, all those factor in. It's just the client's usually kind of looking for what they think is a tax deduction. Our question always is, would you want to pay less taxes than you are now? Doesn't necessarily mean it comes in the form of an immediate deduction. Bobby, let's click through those. You've got individual income taxes. We're obviously all aware of those. You've got corporate income taxes for those clients that own the businesses, which make up a large percentage of the people that most of you and we work with in our practice. You've got payroll taxes that are in there bore by the company itself. You've got the capital gains taxes, which, by the way, members of the center can quite comfortably say that you can eliminate most, if not all, of the capital gains under almost all circumstances if you have the right techniques, which is one of the things that we train and spend a lot of time with the members.
So let me just interrupt for a second. Most of what people hear about are deferrals. A pension plan is a deferral. However, we have some exit strategies out of pension plans that make it actually a tax saving device, not just a deferral device. You've heard of monetized installment sales. Those are deferrals where hopefully you earn enough on the money that you didn't pay in tax in order to make a profit and still have enough money left over to pay the tax 30 years from now. There's things like that you're familiar with, and there's going to be things like that maybe you're not familiar with. But most importantly, what our crew specializes in is timing, combining, and sequencing of things that you individually know about, but you've never thought about how to put them together and what the end result becomes. It's monumentally beneficial.
Absolutely. Sales tax, which obviously a lot of the states have, is another one. Gross receipt tax. And with gross receipt tax, more on the corporate end of it, It's basically taxes or gross sales regardless of profit. So it's just a way for the IRS to jump back in regardless of profitability and charge the tax. You have value add taxes, which is a consumption assessed on the value added to each production stage for a company that's manufacturing a product or service. You've got excise taxes, obviously, which everybody's aware of, or sin taxes, sometimes it's called, manufacturers of tobacco and alcohol, that type of thing.
I thought sin tax was when I made a mistake on my financial calculator. I get sin tax error 27 or something.
That's SYN.
Oh, got it. Okay.
SIN, but thank you for that. That's good. Okay. Property taxes, which obviously we all pay. California gets paid more than everybody else. Tangible personal property taxes. From a corporate standpoint, the tangible corporate, or basically it's additional taxation on goods or services produced. And then state gift inheritance taxes, which we spend a lot of time trying to figure out how to lessen that burden for the clients. So if those are the major types, what we're going to focus on today is more of a service that the members can provide to the clients. For those of you that aren't members yet, there still is some value in what we're talking about, because if you understand the components of taxation, you can have an intelligent conversation with the importance of finding reductions or elimination of unnecessary taxes paid. So we'll spend a little bit of time on that today too.
So Bradley, let me ask you a question. I'm the client. You come to me and you say that you've got some ways to be able to help save taxes, and I say, well, I've got a CPA. They're doing everything possible in order to reduce my tax. What do you say to that?
That's excellent. I'm glad you've got somebody that you're comfortable and competent in, that you feel is competent, and I congratulate you on that. What I would say to you, Simon, is this: there is obviously a lot of components to the tax code, and we work with a firm that specializes in these aspects only. So their primary focus is finding efficiencies or reduction of unnecessary taxes. It doesn't require you to change your existing counsel. But these are specialists, very similar to you going into the hospital and being referred to Mayo Clinic instead of your very competent surgeon. Your very competent surgeon is awesome, but if it's something that's very specialized, they will refer you to an expert or a subject matter expert. This is exactly the same thing. Does that make sense?
Yeah, it does make sense. I think you could probably add to that. There's 73,000 pages in the tax code, and our people specialize in about 30 of them. And specialization in the medical community, it gets down to an orthopedic surgeon, hand surgeon who specializes in the third knuckle of the right pinky on your right hand. But I think the way I would be able to expand the conversation even further would be to say, I understand you're well taken care of, but let me ask you a question. When's the last time you ever got a call from your CPA with a piece of prospective advice to save you income tax? And the answer is almost always never. Think about that concept, almost always never. So then what you would say afterwards is, well, we've got a group of people that, perhaps I might be able to arrange some time with that might be able to review some of the things you're doing and give you some additional value. Would that be of interest? Never make a statement, always turn it into a question so you get participation from your prospective client or even your existing client, because this is a way to go back to your existing client and offset the complaint that people in our industry always hear from their clients. The only time I ever hear from you is when you want to sell me something. Well, here's an opportunity to basically bring some value to the table that, by the way, is going to enhance your ability to sell them something, because you're going to increase their budget, but they don't have to. All they can take and put it in their pocket if they want to. They can make their business more profitable, more saleable, et cetera, et cetera. So we're just going to talk about income taxes today, but there are things to do with every single one of these taxes. The simplest one, by the way, is estate, gift, and inheritance tax. That's the simplest one. The most difficult one is for the W-2 employee. That's the most difficult one. So we're going to deal with business owners, because there's millions of those in this country, and a lot of them make some money, and I know those are the people you'd like to work with. So Bradley, why don't you take over again?
And there is stuff. I mean, there's incredible things you can still do for a high earning or those in the C-suite of the corporation. So don't think just because they don't own the business. But this, as Simon had just mentioned, this focus is primarily on that small business owner. Simon, something happened yesterday on a client Zoom that you and I were on together that it was such an exception to the normal rule. And when you ask the client when's the last time he received any prospective advice from his current counsel, his CPA, he said, well, just last week he told me I could take our 401k deductions from 50,000 total with my wife and I up to 90 if we did profit sharing.
Right.
And there was a hesitation, which great answer, right? That's the first time I've had that come up in a long time where somebody did. But then he stopped a second. He said, that's the only thing in 22 years he ever called me on. Do you remember when the client said that? I was kind of chuckling to myself. So there isn't a bad answer that can come from asking that question.
Sure.
And even if the CPA had, it doesn't mean that the CPA has brought up everything because, again, the focus on those 30 pages of the code that we know better than most. Okay, let's talk a little bit about target client for these reviews. And I want to just, prior to going into this slide, give you just the mechanics of how this works or how it works for the members. We can take a client's last 2 years of corporate and personal returns, send them electronically into a secured portal to a firm that we have set up that will review their last 2 years of taxes. The client does not write a check for this up front. They will do a complete analysis. They will come back to our member or the advisor and let them know what they found and what it would cost to fix it. So if they came back in and said, we found this, 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 and this, and here's the fee, you as the advisor know that before the client knows that. If you like the numbers, then you say, let's set up an appointment with that CPA and we can discuss the terms and conditions and what the engagement fee would cost. If the client wanted to switch CPAs, which happens quite a bit, they're just not happy with who they're working with, that's fine. If they want to use this firm, that's fine. If they want to have this firm work directly with their current CPA, that's fine also. So it's an awesome way at no risk to the client to be able to get a review done. What it does is it uncovers usually uncovers a heck of a lot of unnecessary taxes paid, which you can turn to financial products or solutions for the client. So I don't do this just because I love seeing people save money, because of course I do. I do it because it increases the budget I have to work with to solve the client's problem. And it gives me great credibility in front of the client to, as Simon just mentioned, do something for my existing clients that doesn't involve a product sale up front.
It also makes it a lot easier to get highly qualified referrals, because nobody gets excited when somebody sells them a great big giant life insurance policy, or nobody gets excited when somebody puts them into a defined benefit plan and gets them $200,000, $300,000, $400,000, $500,000 a year deduction. But save them income tax. That means that at the next cocktail party, they get to appear smarter than the guy that they're drinking next to. And I'm telling you right now, it's a monumental change. So go to the target client, Viv.
Yeah, that's sexy. Okay, let's talk about the target client. Go ahead, Bobby, throw that up. Ideal ranges are this. It's the client who owns the business that his income ranges between 400,000 and 2 million. Now, could the number be slightly less than 400,000? Yes. Is the number probably less than 400,000 because they're putting a lot of their personal expenses through the corporation? Yes. But at the end of the day, that 400,000 to 2 million range is a pretty big swath. So this firm that we're going to talk about today, this is who they focus on. So, are they going to look good at 3 million or 300,000? Yes, but this is kind of their sweet spot. They want somebody who can control the method of receiving the income from the business. So we're not doing these reviews for a comptroller for another company. We want to deal with the owners of that small business. Maybe it's 1, 2, or 3 partners or 2 or 3 family members, whatever the case, but they need to be in control of the method of receiving the income from the business. 3 or less owners is ideal. 1 is the best. The only reason 3 or less owners, the reason number 1 is best is that you're talking about one decision maker being able to move the case forward. If you bring in 2 or 3 or 4, can it be done? Yes. Do we do it? Yes. But 1 is usually best just from a decision standpoint. Go ahead and click the next one there. Actually, Bob, I think there's a couple. Well, no, that was all they had really on the grouping itself. So what happens is there's a form that we have the client fill out. The advisor can help the client fill it out, and then there's directions for how to submit the tax returns directly to the firm on a secured basis. Obviously, protection of information, all that's really critical. You don't have to be the go-between on getting the tax return from the client, have that responsibility. So it's sent directly to them, and then they secure that data as they go forward. So let's talk about the process it's built upon. They have 4 key elements that they do when they're doing a review of personal and corporate returns. Obviously, looking at ordinary and necessary expenses, section 162A. The next process that's built upon of the 4 is economic substance doctrine. Simon, touch on that, because that's you spent. I've heard you go through this multiple times with clients, but it's an important.
Well, there are some quote tax reduction strategies out there that sound good. One of them is a charitable structure whereby I buy an asset for $1 today, and I I get an appraisal on what the future value of that dollar is going to be. And the appraisal said that tomorrow, which might be 20, 30 years from now, it's going to be worth $5. And so I contributed to the charitable institution of my choosing at a $5 rate. I get a $5 deduction. I save $2.50 in income tax, and all I did was put up $1. They look good. They illustrate well. They usually have some level of opinion letter, usually the lowest level of opinion letter. But if you think with half a brain, how can I buy something that's worth $1 today and deduct something and claim that it was worth $5 tomorrow? That could be the strategy I'm talking about. It could be conservation easements. You look at things that look too good to be true. The Internal Revenue Service reads exactly the same periodicals, attends the same seminars that we attend, and they don't like things where there's no economic substance. So you bought it for $1 today, it's worth $1. Maybe it's worth $1.05. But to say that my appraisal is based on what the value is 30 years from now is kind of a stretch. And I'm going to do the same thing now on conservation easements. Conservation easement, I understand the concept. The original concept, a family owns a piece of property that they inherited and it was worth $100,000. And today it's 20, 30 years later and it's worth $500,000. And they get an appraisal, it says it's worth $500,000. And they contributed to charity, get a deduction for $500,000. The problem with that is the syndicators have taken that over. And you buy that piece of property today for $100,000. They get an appraisal that says it's worth $500,000, and they take a deduction. Well, I don't like doing things that are on the top 12 list of targets of the Internal Revenue Service. So even if your structure is perfect, the majority of them are not. And so what happens is you will get audited, you will lose the audit. You then have to decide if you want to spend the money to take it to tax court, and maybe you win, and maybe you don't, but even assuming you win, you wind up spending enough money with a tax attorney going to tax court where you're going to be lucky if you break even. We'd like things that are statutory as opposed to hope for, if that makes any sense.
It does. Didn't you and I look at one that was 8 to 1?
Actually, I remember 10 or 11 to 1. Yep.
It just scares
me. I'd love to do it. I really would. I'd love to.
Yeah, be nice to have it.
But I'll tell you something. I don't maintain and establish relationships with professional advisors and with clients for people who get audited, where it's an automatic audit trigger. And even if they win, they're scared to death. If any of you have ever received that letter that has IRS in the corner, you know, your heart starts to palpitate. But there's potentially, you know, a lot of tax saving. That's attractive. That's interesting. Just make sure your E&O is paid for. But the syndicated, it's not the individual conservation easement that's bad, it's the syndicated ones. So if you want to have some fun, look up on the internet the dirty dozen of the IRS, which is things that are on their listed transaction list.
Yeah,
and economic substance is a big deal. Step transactions another one.
Check your E&O coverage also to see what things are restricted and listed, and it could be under a general wrapper, including things that are on the it's a scary thing to put a client in that position. It's scary to put yourself in that position too. So just be careful. And the Center for Tax Strategies and Resources isn't a risky group. We're not trying to figure out how to fly too close to the sun. We spend as much time turning things down as we do trying to figure out how to package them up for use of the members.
There's so much opportunity in the tax code, and you're going to see that in the next few minutes.
Okay, go ahead and click the next one there for me, Bobby, on the 4, effective corporate structure. This is a really big deal, and it's one that's overlooked quite a bit with the businesses that we have as clients and that we've seen a lot of the members have. The proper corporate structure allows so many more opportunities, and it's not to say, I mean, it seems like everything you come across for the most part is a sub-S, and that's the most common, and there's reasons the CPAs give for it and all that. But if you're not investigating the proper corporate structure or a combination of corporate structures for the clients, you're missing out on a lot of opportunities to find reduction of taxes and elimination of unnecessary taxes. So that's part of the review process, going through that with this firm, and then finally a complete and thorough documentation of everything that they've uncovered. One of the questions that Simon and I had with this firm when we first found them is, well, look, you put together this incredible detailed explanation of the tax reduction. You review it with the advisor, you discuss it in detail with the client before they've ever signed an engagement. Aren't you concerned? I mean, what keeps them from just selling away from you? And their answer was amazing. The tax attorney that we work with quite a bit on this said, he goes, yeah, it can happen, and it's happened once or twice in the last 15 years. But we don't focus on that. We do so many things so well that other folks don't do, that we generally don't worry about competition stealing from us. And I thought that was a really good answer on their behalf.
Well, they also added to that the fact that they have an audit protection program that basically says included in your fees will be the fact that if you get audited, we'll take and fight on your behalf up through and including tax court.
Yeah, that's a big deal. No, they're putting their money where their mouth is on their strategies. So, okay, good. So that's the process that this is built upon. Ordinary and necessary business expenses under section 162A. Go ahead and click that up for me, Bobby. Is a business expense in itself or an amount reasonable for the business to take using the ordinary necessary guidelines given under 162? The case tells us what ordinary means at fair market value, and necessary means helpful. So with ordinary and necessary business expenses, there's so many things you can there's so many things that you can deduct that you could justify deducting but shouldn't, right? And when they're doing this discovery, they're not trying to say, you could write off your dry cleaning, but there's some things that are really kind of normal that come up that you're able to deduct. Business lunches that were being held to discuss business, and that could be done at your home. We'll kind of show you an example of when the breakdown comes up on what their review process might look like. But there are so many things, including the Augusta rule and being able to rent your property back to your business for the use that, including getting your kids in there and having your kids, if they have a reasonable opportunity to work for the company, how to use those dollars to set up a college fund and do it through deductible dollars, using the child in the business itself. These are all things that are very common, but not very normally put into place for a majority of the business owners. This is then applied to every expense, but not limited to. So it's including these things: appropriate salary, set using third-party independent reasonable compensation report. So one of the things that we come across quite a bit when we're doing a review is this independent reasonable compensation report. And you've got a client that has an unbelievably substantial income, and they're taking $150,000 for a CEO position in the company they own, that would fair and reasonable would be $300,000 or $400,000. And they're avoiding trying to do that to obviously keep their tax rates down, especially if they have a C corp that owns it, where they're not having a direct connect to the earnings. Part of the guidance that comes back through is saying, we're going to identify what those independent reasonable compensation numbers are for that position, because this firm does not want the client to go to audit, because they also provide the audit protection. So it's all tied in together to say, let's make sure that what you're doing is appropriate for the company itself.
Actually, Bradley, there's another reason, and what they're really trying to do is avoid payroll tax. which is difficult. So somebody might be taking 150,000 out in salary and $1 million out in an S corporation dividend. So they'll pay income tax on that, but they aren't going to pay payroll tax. So the reasonable and necessary is both on a high level and a low level. And you want to have the place to save money is not on your tax counsel. The place to save money is not on appraisals to create values that are going to be advantageous to you. So if you think about something, if you're going to sell your home, you want an appraisal that says it's worth a lot of money. If you're going to buy your home, you're going to want an appraisal that shows a low amount of money. So there's a way to create a balancing between those various types of appraisals. And something that you also might want to consider is doing the appraisals through the tax attorney, not directly by yourself, because then it becomes work product of the attorney and it's not discoverable. So if you don't like the results, you might be able to get a different appraisal.
They do in their analysis, they'll go back in and they'll establish appropriate marketing fees or marketing budgets for the company itself too. And they may segregate the marketing to a separate corporate structure. So that enables a lot of flexibility. So even if it's sub S corporation, there's nothing that says that their marketing department couldn't be set up as a C, as an example. And those dollars that are now being funneled into the C corporation would give some opportunity for additional reduction of compensation perhaps, or write-off of expenses that would not be includable as income. So that's part of the analysis they do when they go through it. And then appropriate rental amounts by engaging an independent MAI appraiser to give reasonable daily rental fees specific to the rented business. Now that would be what I just mentioned a minute ago. It might be using their home to be able to do a business meeting, using the Augusta rule for the renting of the home back for the use of the business and take a deduction for that. So these aren't exotic things, but they're most commonly overlooked. So go ahead and let's kick to the next slide there, Bob. Simon, I'll let you go through this because it's so simple, and you wanted this one. This is so simple, even Simon could do it.
No, I believe me, I understand that. Typically what I do is I act as an interpreter for the attorney and the CPA who tend not to be able to talk English. So Bobby, if you'd go to number 1 on the left-hand side of the screen, this is assuming you've already got an operating company, and then you're going to get that appraisal that's going to talk about being able to rent your house back for 14 days. It's got to be fair market value. It's got to be legitimate. But in addition to that, you can also get reimbursement of mileage, et cetera, from an S corporation. What we're going to do, I think it's on the next slide, is we're going to show you numbers that's attributable to each of these structures. All right, number 2 is that the S corporation is going to pay to a C corporation, which is number 3, a payment for marketing services. So the reason for creating a C corporation in this example to run alongside is the federal tax rate on a C corporation for non-deductible expenses is 21%. The federal tax rate on the S corporation is 37%. So I'm trying to look for ways to be able to save taxes. Even if something isn't deductible, I'd rather pay tax at a lower level, 21%, as opposed to a higher level, 37%. So on $100,000, I'm saving $16,000 of taxes on non-deductible expenses. So number 3 is I set up this ABC Business Development Corporation, which is owned by outside shareholders, 2 of them at 48% each, and then the client owns 4%. We'll explain the reason for that in a minute, but just because you own something doesn't mean you're entitled to receive compensation. You might be entitled to receive a dividend as an economic reason why you bought the stock in this company, but there's issues as to benefits that are available to employees that are not available to stockholders. So then let's see, I got to get rid of this because it's in my way. Let me see how to do this. I'm not terribly good at this. Oh, Bobby, thank you, Bobby. All right. So where's number 4? I don't see number 4.
Right, top right.
Top right? I don't see it. Okay, whatever. So they're going to have principal officers, the family, et cetera, are going to work for the company. Then number 5, they're going to have a marketing plan with hard marketing expenses. This is not a pretend marketing company. This is a legitimate marketing company. Things that the the main business, the S corporation, should be doing anyway. We're going to have a legitimate marketing plan, and we're going to implement the marketing plan, which is going to increase the revenue to the S corporation. The number one. Then we're going to have an overtime plan, which is number 6. That's for meals and convenience of the employer and the employees. Then we're going to set up a medical reimbursement plan, MERP, MERP, at a C corporation level, take a deduction for it. Likewise, disability premiums could also be reimbursed. And we're going to have a tuition plan, which is non-qualified. So we've got, and one of the things that this does not say is we're also going to set up a deferred compensation plan, which there's some rollout strategies to be able to get the money out on an income tax-free basis. So that's not a deductible expense, but again, it's paid for at a 21% federal rate. In California, that amounts to 21 plus 7 on a C corporation, so a 28% rate. If I did it through my S corporation, it would be 37 plus 13.3, or a little bit over 50%. Now we're talking about a 15 or 16% positive arbitrage. Those are big time numbers for non-deductible expenses, and then we'll be able to show you how to get the money out without having to pay taxes. So Bobby, go ahead, Robert.
Well, and that comp plan also uses a life insurance platform, and we all know the advantages of the life insurance platform back on there. You just mentioned being able to get the dollars back, but it does create a nice commissionable transaction too for the advisor. So. And it's all wrapped up into their recommendations when they come back. So here's a case study under a current situation. And if you look at, just go to the bottom line down there, the client had.
No, wait, don't go to the bottom line.
Well, I'm going to go through all of them.
At least one of the columns.
All right, go ahead.
Okay, well, in 2017, he had $664,000 of income. His adjusted gross was $634,000, had to pay state and local taxes of $70,000. Interest on his home or second home of $30,800. Charity was contributing $5,700. Therefore, the taxable income was $537,000. There was no qualified business income deduction because he made too much money. That's $199, I believe. The taxable income was therefore $537,000. The federal tax was $163,000. The state income tax were estimated to be a little bit less than $37,000. The Medicare and payroll tax was $25,000. The total income and payroll tax, $225,871, 42% of his taxable income. If we now go into 2020, which we're saying is estimated, but at this point would probably be legitimate, the income bumped to $755,000. The taxable income after the legitimate deduction was $714,000. The total amount of taxes paid, including payroll taxes, $315,000. 44% of his adjusted gross. That's a big number. Why don't you go to the next slide, Bobby? Okay, so after the tax reduction plan, number one, the income was still $700. I'm going to go to 2020 because I don't want to bore you with going through all these numbers multiple times. The salary and the business income was the same, $755,000, except the dwelling, the unit rental, which comes under something called the Augusta rule, was $56,000 deductible. The marketing fee for the year to the new corporation, $80,000. The prepayment of the marketing fee, same $80,000 because we have different calendar and fiscal years. The additional deduction for a defined benefit plan was $200,000. The total amount of taxable income now was $339,000. The amount of state and local taxes, $10,000. The interest on the second home, $25,000. Charity, the same $5,300. The taxable income dropped to $298,000. Then we took the qualified business income deduction of $59,740. Now the taxable income was $238,000. Go all the way down to the second line from the bottom. The total amount of income taxes was now $90,000 as opposed to $313 in the next column over, 13% of gross as opposed to 45% of gross. That's a big deal. If I tried to do that on my own, even if I was technically competent to do it, I don't have the credibility that a tax attorney has. And so the fact that I can make this presentation, the second somebody asks me just a tenth of a question off center, which I'm not capable of handling, I'm in trouble. So therefore, I want my 400-pound gorilla with me. What, Brad? Brad, I can't hear you. Okay, let's now I
believe
you just went on and off, Brad.
there you go. You're back. Now we can, sorry.
Can't hear you, Brad.
So did you. Yeah, we may have had something in the lines. You know, can you hear me now?
Yes, but you're not moving your lips.
Can you hear me now?
Yes, I can.
Okay. Yeah, I think we had just a sun flare that caused that reduction of no sound. There you go. That, Simon, you said about the credibility part of it. What's really neat about this is once this analysis has been done by the firm, then, you know, the advisor is the first one to see this well before the client ever sees it. And if you as the advisor say, yeah, I want you to present this to the client, they get on the Zoom or face-to-face if you happen to be in the same area, and they'll go through, the tax attorney will go through this analysis with your client. So that if those questions come up, Simon, like you'd mentioned, they come up that are overly technical, you've got one of the folks that wrote the plan there to answer the questions for the client, and the credibility is just intense. It also enables you to do something that we really consider to be an important part of the sales process. It allows you to sit on the same side of the table as the client and ask questions, because you're not selling anything here. You're the source of a potential huge tax reduction for the client. So you get to hero up, but you don't have to pretend to be the expert on all the areas. From my perspective, when I did this, it created dollars that I was able to provide very substantial life insurance, which the client needed both for long-term and short-term on a permanent basis. And we did it almost entirely with tax dollars on the very first one that I ever did. So, but that's not what I'm going to be talking about when I'm running through this with the client. So this is a service provided that's pretty substantial, and it's an awesome way to open up doors. It definitely is. Okay. Is there anything else you want to add to that one? Thank you for going through that in such great detail, Simon.
No, I'm just thinking I've got $223,000 of increased budget, $220,000 caused by tax savings that they weren't taking advantage of, $223,000 of what we call opportunities in the tax code, which no matter how brilliant I am, which I'm not, I communicate well, but I'm not brilliant. But I got a brilliant tax attorney. The CPA cannot shoot down the tax attorney. They can shoot me down all day long.
Yeah, absolutely.
Bobby, you want to go to the next slide?
There we go. All right. So this is just a very small piece. Just wanted to give you kind of a couple of ideas and concepts. But if you want to get the whole reason why people join the center, and if they do or don't join by attending our Academy event, you will come up with ideas and concepts that you can go back and increase your practice revenue with. We have a live event coming up September 29th, 30th, and October 1st in Vegas. And yes, it's set up and ready to go. To register this event, you can go to our website, www.yourctsr.com, and click the Live Academy tab. Just to give you a feel for what the event is like, we have an unbelievable faculty that are going to be presenting ideas and concepts over that 3-day period. And I'll share with you in a minute some of the faculty members that are going to be speaking at the upcoming event. We have done these both live and virtual, and we bring the same level of speaker and content to either one. This one was our opportunity to get back face-to-face in Vegas, so we're kind of excited. If I think about the difference between a live and a virtual, having done it both ways, I really like the live events because there's so much that can happen behind the scenes. So when the speaker's off stage and you're talking to people on break, you're able to share additional ideas, and you also get to know some of the other members and guests. I mean, it's folks in our business and in our universe. And it's nice to have that opportunity. If you go virtual, you'll get the same ideas and concepts. You just kind of miss that face-to-face part of them. So we have pricing on this, and the pricing on it is for members of the organization. It's $750 to attend the 3 days, and that includes meals, cocktail receptions, that type of thing. For the non-members, it's $950. If you want to bring a significant other to the event, That cost is $435. They can attend any or all of the meetings and the social events that we're doing.
By the way, that does not mean a partner or a business associate.
Yes.
That is for a significant other. And the way to start a relationship is not by BSing the people that are putting this thing on, because we're not trying to make money on this. We're basically 3 days at a member price that's $250 a day for 21 hours worth of content. It's crazy. Non-members $950. And if for some reason or other you decide that you want to apply to be a member, we will credit that extra $200 against the membership fee. The difference between a member and a non-member price. Did I talk out of line, Brad?
No, not at all. Except I'm a little offended because I've always referred to myself as your significant other, but apparently I shouldn't be doing
that. I have a smaller room now.
For more information, you can give us a call.
Actually, and actually, this meeting is the hotel that we're using is the old Hilton Hotel. It's called the Westgate, and they're fully open. You know, we all have a certain level of fear of the COVID virus, et cetera, but we will adhere to whatever the requirements are for COVID safety. But the show actually is going to be done at a private club, which is across the street. So you're not going to have tens of thousands of people running through the private club. It's basically going to be our group and the members of the private club. And it's quite a unique operation. There's exercise rooms, there's swimming pools, there's go ahead. You remember that.
Well, you've been there one more time than I have. You and I spent a couple days there on meetings, and it blew us away. High ceilings, very comfortable, very ornate, very beautiful place. It's quiet. They have their own Starbucks, which just really shocked me, but there's some pretty rich members of this group, so I think they kind of forced that in there. They've got, reflection pools and outdoor events. We're planning on having some cocktail receptions in their private areas. We thought it would be very nice for this event to be able to do this in a more quiet setting than just a Vegas hotel or casino. So it will be very comfortable. There is Pilates classes, and there's places to get massages and all that inside if you bring a significant other with you, or if in off hours you want to take advantage of some of the services. It's a pretty cool deal. More information, you can call us at 877-258-2837. Or if you prefer, if you have any questions or comments or whatever, you can send them to the center team at yourctsr.com. And again, that's the 29th through October 1st at the Sterling Club in Las Vegas. We do have a room block at Westgate that Simon had just mentioned. I think those room prices are something like $167, $57, including their fee, somewhere right around there. If you get onto our website, there's more information about that, so feel free to peruse through that. But there's still time to get nice, cheap airline tickets for that too. So
also, just for clarity, those extra services, the massages, et cetera, those are not included in our fee. You'll pay for them for whatever the going rate is at the time. It's just the convenience of it and the fact that you can still have a spouse or significant other with you, and they've got something to do besides just hang around the hotel. It's probably still too hot in Las Vegas to go lay out in the sun for any time period, but you're going to get great value, including not getting harassed by your spouse as to why you're going away for 3 days.
Yeah, if you're going to Cleveland, they wouldn't care. But if you're going to Vegas, it's better if they know you're going with it. At least that's what my wife says. All right, let's go. Let's talk about the faculty a little bit. Bobby, click on that one. The Center's Academy faculty is we have got together just some of the best folks in the industry that are subject matter experts. We have Harlan Nicola speaking, and he works with individuals on reverse mortgages. And by the way, he has a new reverse mortgage for those at age 55. They can free up dollars to be able to provide solutions for financial products that you may sell. You want to pay attention to, if you want to find out a little bit more about that one, by the way, next Thursday at 9:30 Pacific time, we've got Harlan doing a presentation on these two different types of reverse mortgages. And it's pretty exciting stuff because it's a great way for the clients to be able to free up some dollars. So that's Harlan Nicola. We've got, go ahead and click through those, Bobby. You can just put them all up and I'll talk through. I won't spend the time reading all of them, but Ken Buckley is a national expert in premium financing life insurance that's done for you. His style is unbelievable. We right now have quite a few cases pending with him, and we watched him work with the client, and he has the most unique way of making sure that the premium financing policies are funded in perpetuity. Most importantly, how the money from the loan itself is applied to the policy is not what you see with most vendors. So he's got a really unique patented process that he uses. Paul Cella, which is an expert in providing financial consulting to physicians, professional business owners on reduction of their disability and health insurance. Vince Dodonna, the all-time producer.
Paul has over 150,000 doctor clients covered under some of his plans by being able to go into hospitals or HMOs or PPOs and take the stuff that they're already paying and reduce it by 20–30%. It's a great door opener. You don't make a fortune, on the compensation, but it's a great door opener to be able to talk about all the other stuff, such as tax reduction plans.
You bet. Yeah. Walt Dallas, which is one of our tax attorneys, will be coming and talking about tax reduction plans in greater detail than we did today. Bruce Givner is, I believe, to be the smartest tax attorney in the United States. He's also worked with Simon for the last 30 years, you guys, about 30 years, right? Bruce does a lot of things for the center, and including connecting with some of your clients when necessary. And you're definitely bringing the biggest gorilla in the room when you have Bruce with you, because the guy sleeps, eats, breathes, and drinks tax reduction strategy and efficiency. He's just a riot.
I can tell you right now, between Walt Dallas, Bruce Givner, and Joe Strazzeri, whose name is down in a second, you might even give some consideration to bringing a CPA along with you, somebody who you're trying to create a strategic alliance with, or that you already have, to show them the enhanced capabilities that you bring to the table.
That's a really good point, Simon. That's a great suggestion. Kevin Knebel, who is the expert on utilizing the world's biggest Rolodex, which is social media, namely LinkedIn, will come and be speaking live. David McKnight, who's the author of Power of Zero, will be speaking. Mark Pace, who's an expert in life insurance policy management, which is a very little-known science, by the way. Mark does a heck of a job explaining how you can maximize a policy's efficiency. David Nesty, who's a CPA, Chairman Emeritus of Prager International, so one of the most elite accounting firms in the United States. Dr. Vicki Rackner, one of our longtime dear friends and experts in marketing to physicians, dentists, doctors, understanding how they think and how to maximize those relationships. We've got Simon Singer, who you just heard speaking here. Is that a dog's tail I'm seeing in the side?
That is Cooper, my newly adopted golden retriever, who's right now licking my hand, biting my hand. It depends on the thing.
I thought at first it was your hand doing this. Hey, Brad, move on. But it was the dog's tail. Good. Ed Slott, who a lot of you know in this business, if you've done anything with annuities, retirement plans, and that type of thing. Ed's iconic. He's a financial expert, public speaker. He'll be with us. Joe Strazzeri, who Simon just mentioned, another tax attorney out of San Diego. Super, super smart, likes to do a lot of focus work on business succession planning. So he'll be coming and talking to us about that. Michael Zelch, Chief Operating Officer for an actuarial company specializing in qualified plans and how to set those up more effectively than you're most likely doing now. And Dan Zeppelin, who's one of our favorites, who can go back and talk about senior settlement on a basis that he does that we think is pretty unique, where he is putting those policies to bid and getting some substantial numbers for the sale of those products for our clients. So this is going to be and there's so much more we're going to be covering. Simon and I both cover some topics, and we're give you an opportunity to be able to ask questions. And then, these speakers don't generally run out of the room when it's over. They're hanging around for the breaks. But this is one heck of a show. If you can make it, love to have you there. Again, it's September 29th through 30th, September 29th, 30th, and October 1st. To register, just go to, if you want to type in Center for Tax Strategies and Resources in your Google search, you can, but you can just type in yourctsr.com. Click on the Live Academy tabs. Also, while you're on that site, there's a couple other training videos and stuff that we've give you some samples. You can take a look at that. Take a look at the rest of the faculty that's not speaking. That's all on our website. Early bird pricing, members $750 now, non-members $950 for the entire 3-day event. Again, more.
Bradley, am I correct that members get access to the total show for as long as they're members? Non-members, people who just want to come and dip their toe in the water, they get access to the show for what is it, a week afterwards?
Yeah, we're doing that with virtual. We'll probably do the same thing with the Live Academy. You know, with the virtuals, members have access as long as they were registered for the event. You're right, perpetuity. It's on our website and they can pull it up. For the non-members, we always gave them for the virtual events 7 days to review once it's posted, because it takes a few days to edit and everything. I think we should do the same thing with this. You know, because we're going to be taping. I think we're going to be taping. Bobby, you still on? Yeah, we'll find a way. We'll tape the thing. We'll do the same thing that we're doing with the virtual. There's no reason not to. So if it's virtual or live, it'll be the same experience. But we're looking forward to seeing you there. If you want to find out more information just about the center, why somebody would join, or you just have general questions, please don't hesitate to email us. We're pretty responsive on that. And speaking of questions, I believe we had some up here that they disappeared. Give me a minute. Let me pull these up, make sure we've addressed these things. Okay, Simon, Alan Porter wants another 100 copies of that book. So I'll pass that email, the book that he has contributed to, the 15 Tax Mistakes. Yeah. Hi, Alan, long time no talk. Good to hear from you. Bill Newton wants to know if we're still on for Vegas. Yes, we are, Bill. And, you know, the world changes on a daily basis. We're monitoring everything, but yes, we're still on.
Bill, to answer that question, the answer is yes, we're still on. If things change dramatically, we'll wind up having to go virtual. But right this minute, all the speakers are on board and we're on board. So we can only do what we can do. If they close the town down, then we got to do something virtual.
Yeah, and then if we are forced to do that, we'll have alternate dates and hope we're picking the right ones. But we're doing the show at the end of the month either way, virtual or live, and hopefully live.
Well, you know, and especially since the FDA has now fully approved the Pfizer vaccine, and I think that Moderna is just right around the corner. The amount of cases, which is almost exclusively unvaccinated people, the amount of cases is kind of flattened out. The hospitalizations have reduced, but the cases are basically non-vaccinated people, which I don't understand, but that's their privilege. But we're still doing a show.
Yep. Okay, Chris Kelm, one of our members, wants to know if these slides are available to members. Yes, Chris, they are. They're going to be posted on the member portal within about a day. How much does the client or business need to make to have this review done, Mark? You know, the owner, you want to see the owner somewhere around that probably 350 plus mark, but you can call me if you've got an exception to that, and we'll happily.
Well, but Bradley, it also depends. If you got somebody who's making $500,000 and is putting $300,000 into a defined benefit plan, and therefore only has $200,000 of earnings, that would apply also. It really kind of depends.
Yeah, Mark, what you can do on that one too, just like everything else, you know, shoot me just a little brief description of your circumstance, and then I'll call you up and we'll kind of review it. Because we have different places we can send folks for reviews, but we want to make sure all your detail or data is correct before we.
Brad, you want to share with people, because we're not avoiding it, what the cost of membership is?
That's $475 monthly for somebody to get a base membership. And thank you for bringing that up. On top of it, there are things that members can add on but don't have to. We call them bolt-ons. How the bolt-ons work is that we have gone to vendors and that have products that we think that would be of value to a member or valuable to us as producers. And we worked out really, really good pricing for those things because we don't generally take a cut on that. So I'll just give you an example, like Wealthy and Wise and in the illustration software from Insmark. We think it's the best planning protocol that's out there right now. A member can pick that use of that up for $100 a month, add it onto their membership versus.
I think it's 100. I think Brad, I think it's 140 for the two of them. But if you wanted to get it directly, it would cost you about $295 plus a licensing fee of $2,000. We've eliminated the licensing fee and got the monthly price way down.
Oh, wait a minute! You're saying 140 if you do the whole shebang?
No.
What was the one if you? What's the Insmark one where you get the entire package? Because that's the one that had a huge savings with the discs, document on disc, and everything else.
I forget.
I think that's 240 is what you negotiated with them, and it would be like $700 a month and
No,
50.
no, it's like 325, but there's a licensing fee of a couple of $1,000.
It is
Before-
their Platinum Plus program, and it
Platinum
includes
Plus,
everything
thank you,
that they have. They charge a $6,000 upfront fee and $375 a month. We charge no upfront fee and $295 a month.
Well, good. We all had the numbers wrong. Thank you, Bobby. Thank you, voice
Thank you,
from
Bobby.
voice from the garage. Okay, a couple other questions here. Let's see. We got that one covered.
You got Jerry Minardi's program where if they wanted all of the 2-minute videos that basically deal with everything, where it would cost $3,600 a year. With us, it costs $1,200 a year or $100 a month.
Yep.
But
You know, there-
it's the power of size. So he just brought me a ball.
Nice.
So you know,
Well, the other thing too, Simon, that I want to point out is we laugh about a lot of stuff, but before we bring something to the members or suggest that they look at it if it makes sense for them to use it or not, it's up to the member. We go and do these things. So when we bring vendors to the table, it's because we've already gone through their programs. So like Kevin Knebel, the internet expert, we actually engaged Todd and Bobby and Simon and I engaged him for an 8-week program, paid his regular.
No, wait. 14-week program.
Was it 14? It only felt like 8. It went by so fast.
14, and the first segment was 10 sessions, 10 weeks, and then there was the additional 14 weeks.
And it was, for me, it was Friday afternoon on East Coast time at 3 o'clock, which normally you would think that's the last thing I want to do at 3 o'clock on Friday. It was one of my highlights of the week. This guy would spend an hour and a half through the training program, loved it. So anyway, we go through this stuff, same thing, obviously, InSmart, Simon's been using.
Wait, time out. Why don't you share with our audience what your LinkedIn account looked like before and after?
Well, it had basically a stick figure because I don't even know I had a picture. What it is, Simon, is I didn't even know I had a LinkedIn account until he showed me how to look it up. And it turns out apparently at one point I registered for it, but never used it. So I had 23 LinkedIn names. I've got 738 now. And it's not just getting names isn't the game, it's the right type of folks. So he showed me how to optimize prospecting, how to engage people to be able to respond. And then I'll tell you about another one, Simon, because this is another example of something we did first. We loved Kevin's program. It made our LinkedIn more effective for outreach, both for clients and potential members. But then we found something that we could take Kevin's information and automate that and be able to have appointments set directly without, and I'll just tell you what it is. It's Mojo. Right? Mojo had this system where they would actually go back in and database mine off our relationships and set appointments with these people, which I've been doing 8 appointments per week just off the Mojo. So we wanted to test it to see if we liked it, and we loved it. And it was getting us the things that we were hoping for. So we identify these things and bring them to the members, and if they want to add them onto their membership, they can. At $475 a month, we have members increase their practice revenue in their first year anywhere between 100 to 300,000 is not uncommon. So the ROI is pretty good on joining and becoming part of the group. Okay,
there's another thing. There's no requirement to change where your insurance licenses are. There's no requirement to change where your broker dealer is. As Brad said earlier, we're not an IMO or an FMO or a broker dealer. You can keep your licenses exactly where they are right now. You'll have an option if you want to write business through our contracts. There might be more money there for you, but there's no requirement. No requirement at all.
Excellent. Navy Dowdy, have you had any success with your tax review company for pure W-2 executives? The one we talked about today, no. I mean, they're not doing pure W-2 executives. If they're C-suite Navy and they're knocking down huge dollars, we do have resources to be able to do reviews and look for efficiencies. And a lot of times we can find that stuff out on Discovery, as you well know, you write some big cases yourself.
Hey, Navy, you had some pretty substantial results with a couple of our resources. Isn't that correct? Oh, we can't hear him, can we?
Let me answer for him. Yes, Simon, it has. It's been wonderful. I've made some really big cases with your help. So thank you, Navy, for that. Book on tax mistakes, Mark Coker, just send Todd a request and he'll send you information on how you can co-author that book on tax mistakes. That'll be a good thing. Alan Porter told us that 3 Marines have just been killed in Afghanistan, so prayers for those folks. And Richard Coffin said nobody wins in an audit. That's a great comment. You're 100% right. Okay, so I think that caught us up on all the questions and comments that came in. We were happy that you were able to spend some time with us here today. Go to Vegas. It'll change how you do business. And if you have questions about membership, please reach out to us at the center team at yourctsr.com.
As a final note, the major producers in this country have the same tax law, have the same products, and they get results 10 to 100 times larger than the average producer. There's a reason. And the reason is usually the intangibles. So in addition to the tangible stuff that you're going to see and have access to at the Academy, you're also going to spend a lot of time listening about how the intangibles make the difference in the sale.
Amen.
So thanks for taking the time today. And hopefully we'll see you in Vegas. If you got questions, just hit the Your CTSR button or give Brad a call at 877-258-2837. Thanks for your time, people. Bye-bye.
Have a good day.